Hey, Facebook friends and family. I've been talking to a bunch of friends about some investment ideas I had in preparation for Trump winning this election. And very recently, a good friend of mine, Brian, hey Brian, we talked for a couple weeks leading up to the election, and I gave him some ideas of what I thought might be good investments for the coming year. And this morning we had an occasion to chat via text, and I wanted to send him a link to a video that would explain the basics of option investing. Kind of give just a rundown of how everything works when you begin, doing what I do every day. Sadly, when I got on the internet, I didn't find any videos that I thought were really easy to follow and basic. There were some several years ago, but for some reason they're not there anymore. So I wanted to take just a quick couple of minutes to kind of make my own here. And for any of you that have, kind of texted me or sent me messages within the past year or two, wanting to know more about what I do, this will give you kind of a quick overview of what options trading is all about. So let me jump right in. Okay, first and foremost, option trading can be very, very intimidating when you first get into it or do research about it, primarily because the terminology makes no sense. I've been doing this now for, option trading probably for 6 or 7 years. I've been investing for 25. And the terminology it'll really overwhelm you when you start off. So I'm going to keep this very simple and very basic because there's no need to get into all of it. Eventually I might do more videos like this if you guys show an interest in it, and we can get into the really heavy duty deep stuff later. But at any rate, for the purposes of what my friends have asked me about, we're going to talk just primarily about what it means to buy a call and what it means to buy a put when you buy stock options, okay? So let me just break those two terms for you. All you really need to know right now is when you buy a stock option, specifically a call option, it means you believe that the stock, the underlying stock for that option contract is going to go higher, okay? If you're buying a call, stock's going higher. If you're buying a put, you think the stock's going lower, okay? I'll throw one little bit of information at you just so you kind of have both sides of this. Remember, you have a buyer and a seller. In the stock market, you have a buyer and a seller. In the options market, buyer and seller. Always. If you're buying a call, stock's going higher. If I'm the one selling you a call, I think the stock's going lower. Okay? If you're buying a put, you think the stock's going lower. If I'm selling you a put, I think it's going higher. Does that make sense? Pretty basic. We call it the yin and yang of investing. There's a buyer and a seller. Typically, you're on one side, I'm on the other, and it switches back and forth. Okay, so in the options market, you're either buying a call or you're buying a put if you're a buyer. For most of you, you will be buyers. And the reason I say that is because in order to sell options, you have to have a fairly large account and you have to have a certain amount of approval from your broker to do that, because there's a greater amount of risk, greater potential for loss when you're a seller, okay? And I'm only talking about somebody who sells an original contract, okay? At some point, if you buy a contract and it goes up in value, you can sell that contract, and you're not technically a seller at that point. You're just getting out of a position. When I write a contract, I'm originating a position, okay? Imagine nothing exists. There's nothing on the table. I create something and I sell it, okay? That's a true option seller. They call it an option writer, okay? I write options. Okay, so let's back up. That's just a little bit of information, probably more than I should have given you, but we'll go back to the beginning. For most of you, you will be buyers, okay? For most people who invest in stocks, novices and people who are not, too advanced, you're buying stock, you're buying options. You're not actually writing anything and originating anything, okay? So, my friend Sonia, my friend Brian, hey guys, they're buyers of contracts, okay? So, let's talk about calls and puts and what it means to be a call buyer, okay? Because with the Trump win, I have positioned myself with a bunch of things, but primarily one trade in particular that I really loved. So I bought calls. In this case, I didn't write contracts. I felt like I wanted to be on the buy side. I wanted to wait, unfortunately, in this case, for a market decline and a steep one. For most of you who follow my Facebook posts, I think, unfortunately, we're in for a very dark time, and when that happens, markets typically fall. I have positioned myself for that fall by buying call options, okay? So, what is a call option? Well, let's get into it. When you buy options, an option contract, this is just a prop, just a piece of paper, just to keep things square. When you buy an option contract, it gives you the right but not the obligation to own a stock in the future, okay? Again, if you buy an option, it gives you the right, but not the obligation to do something in the future, all right? So let's break it down so it's very simple. If you buy a call option, all right, which is a contract that says you have the right to do something, you have a predetermined amount of money you're willing to spend at a later date, and you have an expiration on that contract at a later date. For that contract, you have agreed that down the road, you will take possession of the stock. Now, just so you know, that almost never happens, and I'll explain that a little further down here in the next few minutes. People rarely take possession of the underlying stock of a contract. Okay, it just doesn't happen. What guys in the option market do, or girls, we trade paper. That's what we do. Okay, and the value of this paper goes up and down just like stock values go up and down. Okay, so let's assume for this exercise that you are the buyer of a call option, and I'm going to use this phone as representative of stock so that you get a really clear and basic understanding of how this works. Every contract is worth 100 shares of stock, okay? But as I said, I'll use this phone. Imagine you've got a good friend who works, in this case, at Samsung, okay? And he comes to your house one day and he says, I want to show you something. And he presents to you the latest and greatest Samsung. Let's call it the S8, because I think we're on S7 now. And he shows you this phone and you look at it and he tells you about all the features, he turns it on, he has you use it, and the phone has some kind of magic that the world has never seen before. And you're just blown away. You're like, oh my God, this is a phone that's going to revolutionize cell phones, okay? Apple does that to you every 6 months, but at any rate. So he has this phone and he's blowing your mind with everything that this phone does. And you say to him, that's really cool, how can I get one? And he says, well, these phones are not going to be released for about 6 months. I know there's been images leaked on the internet, but nobody knows what they can do. You're one of the first people to really know what they do. The phone's going to be available to the public in 6 months, but I tell you what I can do because I got a special deal because I work for the company. I'll sell you 100 of these phones right now for $1,000 each because I think they're going to sell for more. We're going to retail them for $1,000, but you know how when people realize what these phones do, oh my God, they're going to be worth so much more. They're going to be sleeping in the streets for them. They're going to be fighting over them at Black Friday and all that crap. But you can buy 100 of them from me right now. I can get them for you, legitimate, no nonsense. I can get you 100 of these right now for $1,000 each. And you look at the phone and you go, I don't have $100,000 to buy 100 phones from you. I don't have 100 grand. And he goes, okay, I'll tell you what I'll do. I'll sell you an option contract. Okay? And I will sell you this option contract for $1 each. Okay, so basically this contract says that I will sell you 100 of these in 1 month for $1,000 each phone. Okay, but you'll only pay me $1 per phone for this contract. Okay, so I'll sell you this contract for $100, and what that means is you're basically locking in the price of this phone, right, for $1,000. And so as an option buyer, as a call option buyer, you go, this phone's crazy. It's going to turn the world upside down. There's no way that phone's going to be $1,000. It's going to be $1,200. You getting the message? Okay. So you have an option contract that says in the next 30 days, if you want to, you can buy these 100 phones for $1,000. But between the time your buddy came to the house and showed you this phone, a week later, you're on the internet and bam, somebody has leaked what that phone's about to do, what the world can expect when it's released. Guess what? All right, sorry about that, guys. You know when you try to shoot a video like this, kind of impromptu, of course the phone rings, the dog barks, the doorbell rings, and then you lose your light while you're dealing with all that. So here we are. So anyway, let me pick it back up where we were, because I don't feel like starting over. So anyway, so here's what happens. So they leak all these bells and whistles and how magic this phone is going to be, and suddenly the world knows what the retail price of the phone is going to be, but because of all the features, there's already speculation that instead of it being $1,000, people are saying it'll sell for $1,200 or $1,300 or even $1,400. Well, guess what? Your option contract that you were holding is no longer worth that $1 per phone, or in this case stock, that you paid for it, okay? Because the market, the world is saying, oh my God, Samsung has this new phone that's coming out in a few months and it does all this amazing stuff, that contract that you hold has now got a greater value, okay? So your choice at that point, because it still hasn't expired yet, you haven't reached your expiration date for your contract, you can go onto the internet, onto your brokerage account, and you can see what the new value is of your contract. And at that point, because you're profitable, if you wanted to sell that contract, you could. Just like a stock, you could just put in a sell order for your contract. For, in this case, one contract represents 100 phones, or in this case, 100 shares. You just put an order in to sell your contract for the new higher value, and bam, you made a profit. Okay, so for the purposes of this exercise, where the phone is representative of the stock that your option represents, you paid $1 per phone, or $100 for the right, again, not the obligation, to own 100 of these phones for $1,000. But the market, because of all the speculation and all the noise, the market is going, oh my God, this phone's going to be great, and the market says they may sell for as much as, let's say, $1,200. Well, guess what? Even though the phone's not been released, and even though no one's actually paying $1,200 for it yet, speculation says it's going to be worth $1,200. Well, you just made $200 per phone in profit. Why? Well, because this gives you the right to buy this phone for $1,000. If the market believes they're going to sell for $1,200 when they're finally released, you have the right to say, I get that money, because the market's going to pay you for that. And why would the market pay you that $200 more per phone when nothing has actually happened? It's because the guy that's going to buy, or girl, again, it's because the person that's going to buy this contract from you actually believes that when the phone hits the street, it might be worth $1,400 or $1,500. Okay? So the person buying the contract from you before expiration says, not only do I think it's worth $1,200, so I'll pay that extra $200, I believe it's going to go higher yet. Okay? So you sell your contract, you take your profit, and we're all done. Okay? That is really the basics of buying and selling options. It's not much different than it is with stocks. Again, the significant difference, if there is one, is that there is a predetermined amount that you're willing to pay for the stock, or in this case phone, at a future date. There's an expiration date. With the options market now, you have weekly expirations, you have monthly expirations, you have what's called leaps, which is what I'm in right now for this Trump trade, I call it. And leaps are basically really long-term options that go out, 6 months, a year, 2 years in some cases. Excuse me. So that's the basics of buying a call option. Basically, you own a contract that says you have the right to buy a stock at a later date for a predetermined price. And when you enter that contract and you look at the grid of all the different option prices when you're making the trade, you can change the price that you are willing to pay for this particular stock. Okay, so for the purpose of the exercise, we used $1,000 because that's about what new phones go for when they retail. But in the actual options market, if you pick a stock like Apple or Netflix or Priceline, for example, there's an entire option chain, they call it, that will show you all your call options, all your put options, all your expiration dates, and all the strike prices, which in this case we used was $1,000. They call that the strike price. That's the price you're willing to pay for the underlying stock at that later date. That's all listed, and it's constantly changing when the markets are open. It's constantly in flux, okay? So again, you buy a call, you think the stock is going higher. In this case, you bought an option contract, one contract, which represented 100 shares, or in this case, 100 phones. It said you're going to pay $1 per phone now, which was $100, all right, for the right to buy these phones at a later date for $1,000. Now, as I said at the beginning, people rarely ever take possession of the physical commodity, the stock, or in this case, the phone. But let's assume for a minute you actually want to do that. Let's assume you bought Apple stock. You bought an option contract because you thought Apple was going higher. If you actually wanted to, when your expiration date was approaching, and let's say you were up, I don't know, $1,000 in profit or $2,000 in profit, but you didn't want the $2,000. You say, I don't want the $2,000, I want to hold the stock long term because I think it's going much, much higher. If you have the money at that time, you can actually take physical possession of, in this case, Apple stock for that predetermined strike price that you set on the contract when you entered it. All right? I'll let you in on my trade that I did. It's called the SQQQ. That's the Trump trade. It's called an inverse ETF, and I don't want to confuse you guys. So don't read too much into what I'm telling you as far as the details. But the bottom line is this. I believe the value of that trade is going to go much higher, okay, over the course of about a year. However, if it doesn't go as far as I want it to go in that year, but it does go up, I might say, you know what? I don't think all the chaos that's going to hit us has happened yet. I think the market is going to change a lot more. So I'm going to actually buy the stock before expiration. You know, I'm going to take possession of the actual physical stock because that enables me to sit on it longer. Because now I have the physical stock. I can just sit there and wait on it. All right. That's one way that you can exercise your option and hold the physical raw stock. As I said before, most people don't do that. They just buy and sell contracts back and forth, in a lot of cases every day, every week, and the value rises and falls just like the stock market. So I'm hoping that is somewhat of a good basic introduction for you, if you will, into how the options markets work. And I will just throw one last thing at you guys because there may be a bit of confusion about what I said with regard to the trade that I made with regard to Trump winning the election. I mentioned before that I was anticipating him winning. And with that, I was actually anticipating a big market decline the day after the election, but I found out through news media outlets that some pretty heavy investors like Carl Icahn and others left on election eve when the markets were plummeting, as they should have, and they invested billions and billions and billions of dollars in the futures market. And what that did was artificially shore up the stock market so that it didn't look as bad as it was looking. Okay, but just so you know, the trade that I'm in for the next year to 2 years, it's called an inverse ETF, and what that means is that when the value of the markets, in this case the NASDAQ, when the NASDAQ falls, and it's going to fall, okay, I'm just going to make that prediction. If I'm wrong, I'm wrong. But I personally believe that it's going to fall, and it's going to fall a lot. The trade that I've made is when that market falls, the value of the trade that I've made goes up. Okay, and it's called inverse because it's doing the opposite. And I may do another video to explain to you guys why rich people are so rich. They're not rich from working. Okay, they're rich from doing this. They're rich from playing games with the market, and I just decided that I either can complain about it or I can be part of it. And that's what I did years and years ago, so now I'm part of it. Most people don't believe that you can get richer when markets are plummeting. They think you can only make market when markets are going higher, and that's wrong. It's fundamentally wrong, and it's why I know that we are getting ready for a correction like we did back in 2008, like we did back in 2000. So at any rate, those trades are possible. So if you guys have any further questions, you may have a lot, and I'm cool with that. Hit me up on Facebook publicly or privately. I don't care either way. I don't hide what I do. I'm proud of what I do. And I'm happy to help you guys learn, because with what's coming at all of us, there's no better time than now to be prepared for it. And if I can help you guys in any way, I will. All right, so hopefully that's clear. If you have any questions, let me know. And if I have to do a follow-up video to answer some of the basic questions of what I just laid out, I'm going to do that for you guys. Okay, so thanks for watching. I hope it helped. And to all my friends who are already in this trade, sit tight, watch it, fasten your seatbelt, and I think we're going to do okay. All right, I will see you guys soon. Take care.